Hello, everyone. My name is Nathan Cobb, and I want to welcome you to today's Credit Safe webinar. So today, our topic is creating a top-tier credit policy. And we're going to talk about that here in just a moment. But to do that, because I am no expert in this area, I definitely want to introduce our speaker. Lena Chindamo is a fixture here at Credit Safe. She has been on several of our webinars. So if you've been with us in the past, she is a familiar face, and you should be excited to hear from her. Lena is the Director of Enterprise Accounts at Credit Safe Canada. She is a consummate professional with years of experience in credit management and in the credit fields. She is a regular on many different webinars, platforms. I think we were counting it up just recently. Lena's on like 3 or 4 webinars or speaking engagements in the last week, if I believe. So she definitely has the expertise and the knowledge and the skills to be able to talk this subject in a great way. And Lena, it's always fun to have you, and I love having you on here, and I'm ready to learn too. So welcome.
Thank you. Thanks, Nathan. Pleasure to be here to speak with all of you today on this exciting topic of credit policy and why it's important.
Exciting topic, huh? I was going to say that is maybe not something I think everybody would say about a credit policy, but all right. And so,
come on.
Credit policy,
credit management, credit policy. It's all very exciting.
There you go.
Otherwise, we wouldn't have so many guests here today. So I'm really excited.
I know. Folks just keep on coming in.
Yeah, it's nice.
They just keep rolling on in. So welcome to all of you that are still coming in. But so a credit policy, we all know, I mean, if you've been in business for more than 5 minutes, you know that you need this, right? Like this is just expected. It's not a nice to have at this point in history. Like you have to have one of these. But a lot of times, at least from my understanding and my experience, is, we create it, stick it in a folder, and it just starts growing mold. It just sits there. It's not a thing. So how do we prevent that? How do we make this right? How do we, this idea of this top tier or best practices or however you want to say it?
Yeah.
That's why you're here and why they don't want to hear me. So, what do we do? Give us the deal here.
Okay. Well, let's hope it doesn't grow mold. But let's just get down to the roots or to the basics. What is a credit policy and why is it important? I personally like to think of it as a rule book, even a Bible or the do's or don'ts of the department. It really does set the guidelines, the rules for the department, as well as provide authority limits. It does outline the company's or the department's objectives. So, what are we trying to achieve? It definitely helps to streamline process, right? So, among the department so that you can reach those objectives, whatever they are. Importantly, when you think about why is it important? Well, for one, it ensures compliance. It helps with company controls, and it provides for a cleaner audit. And we can talk a little bit more about audit as we go through. But for some of you who may not have experienced it, sometimes there's internal or external audits that take place, and they're always going to be referencing some sort of document or policy in how your company, responds to that policy. So a few things that we need to understand before we even start to document policy, and this is what I like to call as maybe step one, and that is really understanding the company's risk tolerance. So in other words, how much can your business afford to lend to their customers? And, you as a credit manager or, may not have the answers to those. So it's really, really important to have a seat with your CFO or your CEO and have a conversation and really discuss what is the company's risk tolerance. So really what that is you're looking at the company's financial position or their ability to generate cash flow or even raise capital, right? So, how much money does the company have available that can allow them to lend to their customers? You need to understand your industry. It's really, really important. Who are your competitors? What's the amount available for customers for your product? So if you think of, are you in a niche market? Is your product unique, or are there, many other products like yours out there? So, taking all of this into consideration is really going to help you understand what that risk tolerance is. It's also important to understand government rules and regulations, right? Is there something that you need to consider before selling your product? So, those do exist out there. Different states will have maybe different rules. Maybe there's rules, competition rules. So there's things that you need to really understand and take into consideration when you're having these conversations with your CEO or CFO. And of course, your standard terms. What are your standard terms in your industry? Do you want to make sure that those terms are consistent with everyone else, or do you want to change it up? Should they be looser? Should they be tighter? So having those conversations is going to really help you get an understanding of what your risk tolerance is. And then once you have that, then you're ready to get started on your objective. So I would call this, step number 2, your policy objective. What is it that your company or your department is trying to achieve in the policy, and who will it impact? So you have to think of, who is a policy and impact. I mean, off the top of my head, you're going to definitely impact the customer, right? So the customer's ability to buy, or the customer's ability to pay based on those terms that you've set out on your invoice. If you think of the sales department, their ability to sell or to generate revenues, your policy is going to impact them, because you're going to want to make sure that they are selling to the best customers out there. Your accounts receivable department, how do you go about establishing good relationships with your customer and collecting money from these customers, and then in unforeseen circumstances, possibly having to reject or revoke credit. So there's definitely going to be an impact. The policy is going to have an impact on these 3. So really understanding those impacts and what you're trying to achieve. Most policies are going to try to establish guidelines to protect the largest asset on the balance sheet. And we all know that's the accounts receivable. So for one, you're going to protect the accounts receivable. Then you're going to think about growth, sales, and improving cash flow. You'll want to make sure that you're maximizing your profits, minimizing your debts, and providing proper business conduct. So for example, if you think about collections, you want to make sure you're finding your best customers. You may even want to outline what that means, like how define who your best customer is. And we can talk more about that in preceding steps. So if I had to summarize, I'd say that the objective should really be a statement that tells you or states, who am I selling to, who are my best customers, and how am I limiting any losses or protecting the company's assets. Sure. So moving on to step 3, now that you understand your company's risk tolerance and you've set your objectives, now I think you're ready to document your policy. And it's really, really important to document that policy. So you want to make sure that you have something to refer to in case there's questions or inconsistencies or problems. It's that Bible or that rule book that you're always going to refer back to. And it's going to help you with your process, right? It's going to help you with your decisions. So it should be something that you're referring back to, especially, credit is not black and white. There's always going to be instances or situations that differ, from customer to customer. So it's important to have something that you can go back to and refer to. So a couple of things you might want to consider when you're thinking about your credit policy is, of course, your credit application and your requirement for new or existing customers. So if you think of new customers, you're onboarding, you want to get a credit application in, does it need to be signed? Should we have terms and conditions? But also renewals. I'll call them renewals, or maybe existing customers. There's many times when in many businesses where a customer buys from you today, and then you may not hear from them for, 6 or 8 months, or even a year. So is it time to update that credit application? Do you need a new one? Do you have a renewal type process? So kind of outlining, what that process looks like, or what that policy is around receiving new information. We talked about best customers. So who should receive credit, right? So things to consider. Of course, you may want to make mention of the requirement for a credit report, right? And what type of information on that credit report is going to be important for your adjudication process. So things like risk ratings, if there's a rating of, X, Y, or Z, what does that mean as far as how much credit I can issue? Should there be a presence of trade experience or negative occurrences? Maybe I want to understand how many years this company has been in business. Is that important for me and my decision and to determine whether or not this is, the best customer or what a best customer looks like? So those are some things to think about when you're adjudicating credit and how you adjudicate that credit. Where and when to do an investigation. So, there are times when information is lacking, even on a credit report. So, what does that investigation look like? Where do you turn to for more information? Is it simply going back to the customer for financials? Is it, getting a bank reference or getting some additional credit references or going to a registry? So those are things that you can outline in your policy as well. We talked about terms of sales. So, what are your terms of sale? Are they net 7, net 30, net 45, net 60? There's so many, payment in advance. I can give you a whole list of them. Of course, they can be different, and maybe they're different if you're selling globally, or maybe they can be product specific. Maybe there's you sell different lines of products, so you have different terms for those products. You want to make sure that that's in your policy, because that's information that can be shared with a customer and of course with your sales team. So that's something that I would definitely include. Account reviews, we talked about onboarding new customers. We talked about customers coming back. Well, how about the existing customers? Like, what is the process to ensure that they still pay you on time and that there's no, surprises, right? So,
absolutely.
So it's important to review customers. So how often do you want to do that? Is the policy going to dictate when that happens? Is it going to be when there's a change in the company's performance? Is it going to be monthly? Is it going to be quarterly? So that's something that you'll have to decide and write into your policy. Mm-hmm. We have approval matrix. So let's think of, who has the ability within the credit department to adjudicate credit and at what levels, right? So if you think of very large corporate organizations, you could have a VP of credit, a credit controller, a credit manager, a supervisor, an analyst, and the list goes on. Or you can have like a smaller organization that maybe only has 2 levels, but you want to create a matrix so that everybody's authority is spelled out. So, when there is a time, should it be an audit or, we need to refer back to the policy, we can see who has the ability to make those decisions. Okay. It's also important to understand when you're revoking credit terms as well. So what is going to cause you, your business, to say no to a customer or to, an existing customer that now you need to all of a sudden make changes to. So have that outlined in your policy as well. It's going to save you a lot of headaches down the road, especially, with the sales team. And I hate when they refer to credit as sales prevention. That's not what credit's for. Credit is really there to assist you in the sale and to make sure that the sale is happening. But they also want to communicate. They want to let you know when things are not happening with their customer, or if there are issues with the customer, so that if there is that opportunity that we need to, pull credit or pull limits or change terms, that it's something that's understood as to why it's happening. So again, make sure that that's something that you document in your policy. So there's really no surprises.
Sure.
I would like to think that, and again, you don't have to include all of these. I mean, these are just a list of things that are best practices, things that I think that are important. And again, it's going to depend on the sophistication of your department, the areas that may or may not apply to you. If you think of things like credit insurance, for example, is there an insurance policy? What are the requirements of that policy? You really have to understand that policy, because there could be a requirement to submit a certain aging report, for example, or a claims report, some sort of report that's being required. So who is going to be responsible for that? And how often does that need to happen? There's also things like discretionary credit limits. So basically what that means is that you have the ability to make credit decisions outside of the policy. So now that's something that you may have to include in your matrix. So again, things to consider, right? So it's not always black and white. But there's file maintenance as well, right? So what are you collecting from your customers on onboarding? What kind of documents do you need? Is there any legal requirements, any sales tax forms, or any type of documentation that you require that should be in the file, even if it's an approval form? If your process is to check the box, send out a letter to the customer that they've been granted credit, well, that should all be in the file. So something that can be referred to, again, especially during audit. And I'm going to say that a couple times, and I probably get some questions around that. But it's important to outline what should be in a customer file so that you can go back and refer to it. So nothing should really be a surprise, that's for sure. Collections, right? We want to talk about collections for sure. So, what are the stages of collections? You can start with, of course, the first stage, which is making that first call. When do you make that first call? Is it 1 day past due? Is it 10 days past due? You want to outline what that is, right? You want to make sure that you're following a process and treating everyone the same, treating all of your customers the same. So when is that follow-up? When do you need to issue a warning letter? And lastly, when do you know that you've exhausted all of your efforts to collect on that company? And is it time to send them to a third-party collection agency? So following the policy can really result in a very effective collections process, and of course, stronger cash flows. At the end of the day, if you do have a collection situation or a third-party collection situation, now you have to consider the bad debt. So make sure that there is a provision in the policy that speaks to bad debt. When is an account deemed bad debt, right? Is it who's got the ability to write off? And again, at what levels? Now you may have another matrix to consider here. Should the write-off be, someone, a collector, or maybe it should be a supervisor or a manager that approves those types of write-offs, because at the end of the day, that's going to hit the company profits. So, you want to make sure that that's written into your policy. It's unfortunate, but we do see bankruptcies and insolvencies, and also statements of claims, So what happens when an account is under these conditions? Do we have to turn off the tap? Right? Stop shipping product to them? Do we need to fill out the forms? Who fills out the forms? Does it become a write-off? Like all of these questions can be covered in the policy. So again, everything is treated in the same way, and everyone knows how to treat those situations. So again, that's the importance of the policy, right? Is really understanding what those steps are, what steps we need to take, and how we go about managing some of those conditions. If you think about monitoring customer behavior, I like to add something like that into the policy, because I think it's important to be able to monitor customers, right? So how do we monitor? How often? What actions can we take if there's a trigger? Those are things that you can outline in your policy. And how are you monitoring? Is it manual? Is it a manual process? Is it automated? Are you getting alerts? So, understanding what that monitoring process looks like and what it means, for your customers or for your sales team. If you get an alert about a customer who is potentially, their score has changed, or all of a sudden there's some negative occurrences, we're going to have a reaction to that. So maybe it's important to communicate or to build that into the policies, so that there's an understanding around, what happens next. Okay.
Perfect. Yeah.
I know there's quite a few here. So again, these are all ideas, and none of them are must-haves, or it's just best practice. So things to consider when you're documenting. We talked about audit. So what is your audit process? You really want to ensure compliance of the policy. So do you have a process monthly or quarterly where you have individuals on your team that maybe open up a file, determine if all the documents are there, or check all the credit approvals? Are they within the right authority matrix? These are things that you want to do and check. For one, it keeps your policy current and fresh, right? If you're doing those audits, then everyone is always referring to the policy, so it's no longer collecting dust or growing mold, as Nathan says, because you're referring back to it, and it's part of the process, and you're ensuring that it's being used and it's effective. Because once it's not used and when it's not effective, then yes, there's really no purpose to it. If you have a procedures manual, it's really good to refer to the procedures manual. What you want to do as well is you want to validate those procedures. So review the items in the manual with the staff. So you need to sit with the individuals, document the process, and of course do it with the staff, because they're the ones who are doing the work. So they know exactly the steps that they're going through, and you can review that with them. Lastly, when we're talking about reviews, you would want to consider, when to review your credit policy, right? So again, keeping it fresh. Maybe you want to do that annually. Maybe you want to do that when there's changes in the financial conditions of the organization. Maybe there's been a change to the risk tolerance, or maybe changes to the product or to the market, or your go-to-market plan, whatever that may be. So consider building in a review process so that you can go in and review. That was the last point that I wanted to make as far as documenting. I'm not perfect. I may have missed a couple. Maybe there's others out there who can share, something that they think is important to add to a policy. So this way, everyone can get the benefit of that. But my last step, which I think is really important once you've had the ability to document, is before you can even implement and be able to effectively use your policy, you need to get buy-in. So you need to get that buy-in from all levels of management, right? In order to get this, you're going to need to circulate that policy or that document, share it with the stakeholders, collect their feedback, adjust if required, so make changes if necessary. And then once it's accepted, you really need to train. You need to train everyone so that everybody understands the policy and is following the policy. Okay.
Yeah.
So we spoke a lot about developing a new policy, right? So now maybe we can consider an existing policy, or a time of review, right? So if you take our current situation, or the pandemic, for example, how has COVID changed your business? Does the policy need to be revisited, right? So this would be something that would be built into your policy as far as, when or is the right time to review the policy. So understand the review process in your policy, and how to go about making those changes. Is there flexibility in your current policy, or is it very rigid, right? You must do this, or in cases where there's some flexibility, there may not be a need to change the policy. Maybe the policy allows for some flexibility, so something you want to consider. But if it's not flexible, then I would think that a pandemic definitely would change financial conditions of an organization, and probably a good time to make some of those changes. So things that you want to consider during turbulent times that could impact your policy and your stakeholders is things like the need for monitoring. Maybe there's a need for more frequent reviews. Right now, we have seen some bankruptcies. We haven't seen a whole lot, but we keep hearing that there's more to come. So do we want to determine if now is a good time to change up how we're currently monitoring our customers or our best customers? Because even our best customers can fail, right? So what are those trigger points? What should we be looking for? Terms of sale, right? Maybe we've said that our terms are net 30, and during these turbulent times, we're experiencing customers who are paying at net 45. So maybe we need to get creative with our terms. Maybe we need to give customers incentives to pay, or to provide short-term relief. For example, some companies will charge interest on past dues. So maybe we do away with charging interest because we want to be supportive and we want to help our customers through these difficult times. Maybe we don't want to hold them because they're 5 days past due. Maybe we want to give them a little bit of leeway and hold them only if they're 10 days past due. So even things like, releasing with half of the payment or working out some payment plans. I mean, these are just ideas, right, on how you could help your customers through these changes. And even collections. I consider collections, right? What kind of a stance do we take with our customers now? Are we really hardcore and want to make sure that we take out the whip and you have to pay when we say you have to pay, or maybe that now is not the time to be doing that, right? Or maybe we need to be a little bit more empathetic with our customers, because they're going to remember us. They're going to remember us for working with them. Sometimes, yes, you do need tough love. It's necessary, but sometimes you need to support them through tough times. So, when is a good time? How can you help them? And when's the right time to send them to a third-party collections? So determine whether or not you could relax your collection process, or if you have to tighten it up, right? It's something that you're going to have to consider and determine whether or not there needs to be a policy change.
Sure.
So changes are required to the policy if it's not flexible. So, we talked about this before. It's important even at a review, when you're reviewing the policy to make changes, is you should always get that buy-in. Yeah.
So we've got a bunch of different questions that have come in, some comments, all that different stuff here that I want to get to. And folks, we do have time. So if you have others, please go ahead. I know Lena just threw a lot of information at you and did kind of keep it high level, more in generalities on best practices. But if you have some more questions, specific stuff on that, please go ahead and do that. I will say, I'm going to throw a shameless plug in here, folks, and this will be in the follow-up email that you get. But we have created a credit policy guide page, landing page that has not only a bunch of these best practices, some other information, as well as sample documents. So it has a sample credit application. It has a sample credit policy. It has a sample everything that you could want, that we can think of for you, that you can take a look at, reference, use, whatever you need to do on that one. So we've had a few people say, you were talking about changes and how much stuff is changing. And we've definitely had some people say, yeah, we've been doing that. Like, raise my hand. I can attest to that. We even have a quote here of pivot the policy. So now you might have a new little catchphrase for it. You can pivot your policy. But a question here, you had mentioned early on that your credit policy needs to be aligned with the mission and everything like that. How does that even happen? How does a company's credit policy actually help further or advance or grow the objective or the mission of a company? I mean, how does that work? We've got that one.
Right. So I like to think of it as keeping the engine running, right? It outlines the requirements, it sets out the rules, it keeps everyone in compliance. And by taking the time to make your policy effective, you're really setting yourself up for success and taking a big step forward, positively developing your organization. So I think, that's how. I think that's really important, right? It's really understanding why it's there, how it keeps things running, how you can refer back to it, and how it keeps the department effective.
Yeah. Okay, great. Bunch of different things going on here. So I'm going to just kind of keep going. Guys, if they seem a little disjointed and out of order, it's, I'm just trying to throw them together and read them all at the same time. So if I document who does the what in the credit policy, how do I deal with changes, new hires, promotions, restructures, et cetera, et cetera, et cetera. So what you had mentioned that in your, I think you call it the matrix, the approval matrix or something like that. What, how do they handle this?
Right. So if we're talking about new hires or promotions or changes amongst the team, I think my recommendation is really, and I've seen this done. I've participated in this, where you really need to ensure that you're adding the policy to the hiring process, right? To be able to share not just the credit policy, but all policies with any new hires. So taking the time to to pass that individual on to different departments so they can have a conversation to understand the policy and ask any questions. So I think my recommendation would be exactly that, is to make it part of the new hire process.
Okay, great. Do you find that being proactive, checking on approval statuses on invoices, helps the collection process?
For sure. I think if you don't have a perfect invoice, it's not going to be a perfect collection. So, that is key. There's a lot of companies out there that will get out invoices and they have mistakes. And when there's mistakes, that just means disputes, and disputes means delayed payments. And that means a lot of phone calls and a lot of chasing customers. So, ideally, you want a perfect invoice. So you need to make sure that if there's anything that you do right, it is getting out that invoice exactly the way the customer expects it.
Okay, good stuff. And folks, if you need follow-ups to any of these questions, please feel free to ask. I'm going to aggregate a couple here, and it's you talked about training. You talked about the need for training with your credit policy and everything like that. I'm assuming everybody understands the credit department's going to be trained, but how do you train other people that need to know about this? What's going on with that? How does that happen?
Right. So, from the top level down, like once you've had the ability to distribute the policy and get the buy-in, you want to spend time, and you want them to spend time with the people who live and breathe the policy, right? Because they're the only ones who are going to be able to answer the questions or take away any concerns or address any concerns that are in the policy. So my recommendation would be, to build a training process that shares a policy, takes feedback, and walks through the policy and answers any questions.
Okay, good stuff. We did have a couple of questions come in here that I'm seeing that have asked about where to get those sample templates and stuff like that. I promise that'll be in the email. It will send you directly to that. You'll be able to find them, no problem. Your email, the follow-up email will have a link to a landing page that will have that resources, kind of a resources list, as well as the recording to this webinar. So don't worry, you don't have to write anything down or remember anything. We are going to send it to you. It'll be there, and you can use it. We've made it available for you. And then also remember, folks, too, if you want specific help or you want to have your credit policy reviewed or anything like that, we are available to do that as well. I say we as a collective company, we, not this guy, but our experts like Lena and our other folks in Credit Safe can review that, can take a look at that for you, can help you out with that, and there'll be a link there as well to set up a time to get your stuff reviewed and get some feedback on that can help you to have that, make sure that you really have that top tier best practices being done, all of that. So get back to these questions here, and still we do have a little bit more time. So if you have a question, please throw it in so that we can make sure to get to it. But how can I make sure that other departments sales, customer service, et cetera, can get behind my credit policy and it isn't just approved by the executives or the management. So you did mention, make sure that the bigwigs, so to speak, buy into this. But I mean, this is a good point. Like, how do we make sure everybody else is too?
Right. So once it's endorsed by the respective leaders, I mean, they should be sharing that policy with their teams and getting their feedback and their buy-in, right? So once you have that support from the top, I think it kind of just flows through the organization, right? It's a process. They're going to present the policy. They're going to talk to their teams about the policy. They're going to share the policy. They're going to jointly or collaborate on the policy and how it may impact them. And then they're going to share that information across to the policy owners. And then if things need to be addressed, and it will be addressed. And that's, again, on the department who owns that policy to make sure that they are addressing concerns and legitimately making changes if they need to. I'm losing my speech here.
That's okay.
So to be able to make the changes if it's necessary. So once you get that buy-in at the top, and it really does filter through the organization. I've seen it happen. It works really well, but you always have to get that buy-in. And I can't stress enough, right? Because there's companies who have gone out and created their policies and just tried to put them into practice and threw it out there, without getting any feedback or without, having conversations. And then all of a sudden you get this, credit and sales just going head to head, headbutting because they don't understand the policy. They don't understand why the requirements are important or what's needed. And there's always a constant battle. And in those cases, that's when you hear a lot about, the credit department is like the police. They don't let anybody through. And that's not where we want to be. So if you are building a credit policy for the very first time, I can't stress enough how important it is to get that buy-in and share that information, make sure everyone is on board, because once you have that, it's gold. Then there really is none of this headbutting. Everybody understands the policy. They abide by the policy. The process runs smoothly. You collect the money that you need to collect, and you have strong cash flow.
Okay, we got a bunch more questions coming in here. This one's on basically, we've had a couple actually on updating or revising this. Do you find that a set schedule works best, or is it on a case-by-case basis, or how do you go about revising these as things go on? Like you mentioned, the pandemic, a lot of folks were revising their credit policies due to that, or due to changes in markets, or something like that. What do you suggest on that? How should it be revised? How often? What's the process? Those type of things.
Right. So, and so I mentioned earlier, there should be a provision in the policy on how you go about reviewing the policy, right? So, you don't want to be doing that every month, right? So again, that buy-in is important, because once you have that buy-in, everything is going to flow and work really, really well, that you don't have to go in and revisit things unless there are some major changes. And some of those changes can be, like I mentioned earlier, changes to markets, maybe changes to terms. The pandemic, of course, right? There's market conditions that have changed. So you want to be able to reflect those changes. And by doing that, you're not only, allowing the business to continue to operate and to be effective, but you're being compliant with the policy as well, right? And you're setting those new guidelines and those new rules for people to follow, so that if and when there's an internal or an external audit, and I'll keep mentioning that, it'll go smoothly. So for those of you who have gone through audits, the auditors will come in, they'll look at the accounts receivable. They have to make sure they have a policy, so now they have to match what the team has done to the policy. So they're going to go in and they're going to make sure that all of those checks and bounds are there. So it's really, really important that it does reflect the true state. So if there is a pandemic and all of a sudden you're doing something differently, when those auditors come in and it's not in the policy, it's you're going to have a gap, and And CFOs, they don't want gaps, not in your policy, right? Because you're no longer compliant, and you're not meeting the compliance standards, et cetera. So again, at minimum, I think you should review your policy once a year just to make sure that nothing has changed. If there is a huge change, whether it be your market, the industry, your terms, your product, and you need to revisit the policy, then you do that and you make sure that it always reflects the current state.
Perfect. So yeah, we've had quite a few folks say that they did something different during the heart of the pandemic, or are still doing something different, or what have you. So that makes great sense. So a bunch of questions here. Is it best practice that the credit department interact directly with the buyers of a potential customer, or should they allow the salespeople to be a third party for that, or like a middleman for that, especially when these people are definitely looking to get credit with you?
Right. So I think it's really important. Relationship is key, right? So whether the relationship is with accounts receivable or it's with sales, I always encourage, the sales and credit relationship to be hand in hand with the customer, right? Because the sales team is the one going out looking for your best customers, and they're going to come to credit for that approval. So having that three-way line of communication, it can be also helpful if there is a situation where a customer can't pay, right? You're gonna want to have conversation with your sales team, and perhaps you do that jointly. You come across as a united front, and it's not just the credit department saying, no, this can't happen. The sales department is supporting the efforts of the credit department. So I would think it's important that relationship is definitely a three-way relationship.
Okay, great. Suggestions for a policy that accommodates the different philosophies across regions and markets. So I'm guessing we're talking a bigger or an international company here. Do you have some high level suggestions for them? I'm not going to give full thing, but Lori, if you want to reach out to Lena, you can easily do that. Her contact information will be on that link as well. But any quick questions here before we roll on to these other questions?
I'll just make a quick comment there, because I think I touched upon it when I spoke about terms and product, right? So if you have, if you're selling globally, your terms globally might be different. Your markets are different. Maybe your restrictions or regulations are different. So you really have to understand what those are to be able to document them into your policy. And I would suggest you do that because, again, how you deal with a domestic customer can be very different than how you deal with an international customer. And, I've dealt in international markets, and, you have INCO terms or international credit terms, which will be different. In some cases, you have more secure terms, like you may have a letter of credit. So how do you handle a letter of credit? So really understanding what those markets are and what those differences are, and putting that into your policy. Hopefully that helps.
There we go. And again, just remember, we can always, Lena's stuff will be on there. My stuff, if you want to talk to me, are all on these different things, and you can reach out. I will happily put you in touch with somebody that can help you with any of these questions in more detail for your specific situation. So question here regarding some of the information that you can get to help back up a credit application and everything, specifically around banks. What useful information can be provided from a company's bank, and what are they even allowed to provide that could be helpful for you in making credit decisions? Mm-hmm.
So that, that's going to depend, I guess, on where you live. So, for example, here in Canada, you need permission to get a bank reference. So we usually send out an authorization form that allows for that. The US market might be different. Credit Safe has financial trade data that's available on our reports. But of course, there's a form that needs to be signed, because there's some regulations around that. I'm not too familiar with what they are, but how you use that information when you're making a decision is, again, going to depend on your risk tolerance. So, how much credit do you want to extend to someone who maybe has low six-figure balance in their bank account versus a high six-figure balance in your bank account. So again, those conversations and how you set those credit limits are going to depend on the company's tolerance for risk and that risk appetite.
Yes. And there is on that same landing page that I keep talking about, that webpage that I've mentioned, there is a bank authorization setup whereby if that's part of your policy, that you could add that to it, and those customers would then exactly have to provide that. And then it allows the banks to provide a bit more information on the status of their accounts, the average balances, those type of things. So would you suggest that project managers get with the credit department prior to listing terms and statements of work or anything like that, so that they can have everything kind of lined up with what the credit policy is?
Absolutely. I think that could only help, right? It's better to get an understanding of what can or cannot be done prior to engaging in something new, because it's going to be really difficult later to adjust to that. So again, collaborating with any department within the organization, I think is important before you put out a new product or the marketing team goes out with something new. Sure.
Another question here. How often should you review existing customers' credit? Is it important to contact the customer if we want to change their limits, terms, or anything else?
Yes, absolutely. So for sure. I mean, customers don't like surprises, and especially if you're pulling credit or you're reducing their credit because they're calling to place a new order and all of a sudden they don't have any credit, and they used to have 20,000, now they only have 5. So communicating that back is really important, because it's you don't want an upset customer. The first part of that question, I'm sorry, I went off on a tangent. And
how often do you suggest reviewing existing customers' credit?
Yeah. So, I mean, best practice, at minimum annually, you should be reviewing your customer's file. But I like to say that in today's economy, in today's world, where we have information at our fingertips and we're able to monitor customers on a regular basis as changes happen, you're getting real-time data on credit reports. You're able to adjust very quickly. So if you see a customer who used to be low risk, all of a sudden has some negative occurrences against them, or they're starting to have more past dues than they would normally have, and their credit score is dropping, that's a time to review the customer. So no, I would not say that best practice is annually anymore. Long gone are those days where we used to do it once a year. I think more and more credit professionals are using monitoring tools so that they can ensure that they're on top of their customers' payment behaviors, on top of any situations that may arise, and then they can adjust accordingly. Because if you're not able to do that, with a blink of an eye, you can really impact the company's profit. So if you're not on top of your customers and something drastic happens, then you're going to get hit with a huge loss. And we all know that to make up that huge loss, because if your profits are only 10%, you got to sell so much more to make up for that. So again, it's really important to monitor your customers and review them when necessary.
And we do have some webinars about the monitoring that CreditSafe offers, as well as an entire page all about it, how to use it, and all that type of stuff. So again, if you just want to, folks, if you have questions with that, there were a couple that came in that I sent my email out to those folks. You have my email. I'm the one that sent you the registration email. So you can just reply to that. I'm happy to get you in touch with the folks that can do that for you, whether you just want to get started with monitoring or you want to fully integrate and automate that into your process, where decisioning will be done in the background and always be done right and done for you. We run the full gamut. So just go ahead and do that. So Lena, one last thing as we wrap up here, and I want to be respectful of people's time. You went through 4 things, and I don't want folks to miss those. I know we've got a recording. I know they're going to get sent this, but can you just kind of overview those 4 things for me, those 4 steps that you had, so that we can kind of leave on that note of this is really the high level best practices that we're talking about today.
Right. So initially we talked about risk tolerance. So understand your company's risk tolerance. So meet with your CFO, meet with your CEO, meet with your management team, understand, the company's ability to lend, create those objectives. What do we want to do as an organization? What objectives do we want to reach? How are we going to reach them? Then document. And once you've documented, make sure that you're sharing, getting buy-in. It would be step number 4. So again, it's really important. Once you've documented, share that information and then get that buy-in, and you will be very effective, or your team will be very effective.
Awesome. Well, Lena, thank you so much. You are a pleasure as always. And there's always so much information that you give when you come on with us. And it's always great to have you. Folks, thanks so much for having us in your screen with you today, on your phone, wherever we were joining you. We love having you here. We love being able to have this community where folks can ask questions and we can have this going on. Lena, again, thank you. It is always a pleasure. And everybody else, thanks so much.
Thank you. It was a pleasure to be here. Thanks everyone for joining. If anyone has any questions, feel free to reach out to me at any time.
Absolutely. Thanks, folks. Have a great rest of your day. Bye.
Stay well, everyone. Bye for now.